Hey, welcome everybody to the 40 Finance channel. My name's Jeff Beers. Today we're going to talk about Enphase Stock. They just reported their earnings yesterday. We've got a lot to look at. If you remember, Enphase is a stock that was definitely running ahead of its sort of fair valuation, if you will. I'm an Enphase stockholder, and this stock sits at, I think, my third top position. So it's a big play for me, and I'm definitely interested in what Enphase has to say. So we'll dig into the details, and I'll let you know where I think this stock is going from a price target perspective. And reminder, if you like Enphase stock and other stock market analysis videos, then please like this video, subscribe to the channel. Thank you very much for all your support. All right, first on the raw numbers perspective, you see the headline, Enphase Energy EPS beats by 13 cents. That is actually the non-GAAP EPS that beat by 13 cents. GAAP EPS was a miss by 4 cents and landed at 22 cents. Revenue, not too bad, $300 million plus 46.8% year over year, and beat the estimates by about $10 million. Adjusted gross margin of 41% versus 38%, or call it 39% from the consensus. This is one of the big sweet spots for Enphase, and that is, unlike other solar suppliers, their margin is very, very healthy at 40%. Then you see down Q2, Enphase guides for revenues of $300 to $320 million. That's coming in a little light. The consensus was $321, but really heading into this next quarter, this is starts to get into sun season, if you will. So a lot of people were disappointed by this guidance. And Enphase, I would say, they take their guidance pretty seriously. They certainly don't just throw a dart at the number. So it wouldn't surprise me if they come in ahead of this, because we do have some headwinds right now that we're going to talk about right here that are concerning for the business, quite honestly. And if they work some magic and get past those constraints, then I could easily see them beating this number. All right, second headline, and this is where we're going to talk about the challenges. Enphase poised for big opening drop as chip shortages worse than foreseen. Stock's down about 9%. It looks like it's at 145 right now. This was minus 9% pre-market. And what this comes down to is a chip shortage hurting two components of Enphase's production capabilities. And the CEO went into detail. He did not dodge any bullets on this one. He answered all the questions. And you see that analysts came out of that Q&A and saying, you know, semi and supply chain issues were worse than anticipated. I think this is true. And then you have another analyst saying it cannot reconcile the current bubble valuation and limited near-term upside. So basically suggesting, you know, to not necessarily sell the stock, but the stock is expected to go down. All right, so chip shortages coming in on the lower end of guidance. Don't, you know, keep in mind this is a high growth company. So when you're not putting up high growth forecasts, everybody starts to get concerned. And on the earnings call, the CEO went into detail about the fact that they have more demand than they have supply for the rest of this year, at least at this point. So that's the big concern, and a lot of companies are facing this with the semiconductor shortage. When you think about automobiles and you think about AMD and chips and GPUs and all those things, people want more. And it's very good news, to turn the corner on Enphase, it's very good news that demand is outstripping supply. But what that looks like for an analyst who doesn't have any tie to the stock, that looks like a company that is essentially losing money because you can't fulfill the orders that customers are ready to pay you for. Now, from my perspective, I'm in for the long term. I'm in at around $180, so I'm definitely taking a slap on the face with this one right now. But here are some of the things that I think are probably good news, certainly for the long term. And that is, of course, that demand is outstripping supply. So, you know, semiconductor shortages can be fixed. They're not the kinds of things that you can fix overnight. But what they went into on the earnings calls, they've lined up additional supply chains, right? So additional foundries, additional partners. So if you can only get X amount from one semi supplier, you can go hire a couple others and maybe make up for that demand gap between supply. So they are working on it. They're not just throwing their hands up and saying, you know, this is how it's going to be for the year. They are actively going about it, and I encourage you to read the earnings calls transcript because there was a lot of good news in there. The next point I'll bring up is that no matter how you look at it, Q1 for the solar industry is the lowest quarter of the year. Okay, we're talking about January through March, and outside of maybe Australia, Florida, and Texas, it's not going to be the ideal situation to do an install on solar because frankly, it's even hard to get the readings and set things up unless you have the sun out. So when you think about countries like Europe and the upper part of the United States, this is not solar season when it comes to buying and installations. So with that being said, I definitely look for at least Q2 to buy us some more time in a reasonable manner to see if they can get this semiconductor shortage figured out. Q2 is when the sales are going to start. We're right in the middle of Q2 right now, talking about April, May, and June. So if you're a long-term shareholder like I am, and you're wondering like, geez, you know, the next year doesn't necessarily look good, I would encourage you to hang on to the stock, certainly at least through Q2. At this point, let's see how that goes. And you'd probably selling yourself short if you sold before Q3 and Q4 because those are big months as well. We're literally getting the information from the worst quarter of the year right now. All right, next up, they spent a lot of time talking about their installer network and the things that they're doing to make Enphase easier to install. And ultimately, the game here is they want to be the recommended solar provider from all of these installers and dealers, right? And so they are going out of their way to make installation simpler. They're updating software that used to take, 2 hours to install. Now they're trying to get it down to an hour. They're doing 24/7 installer support. They're with COVID going away, they're going to be able to do their on-site training with installers. And guys, these installation seminars, if you will, they might as well be sales calls, okay? So you are investing in these installers and suppliers. They're taking time out of their day to learn what you have to offer. And who do you think you're going to recommend after you walk away from a 1 or 2 hour training session on here's what Enphase is doing, here's how you put it in the house, and oh, by the way, here's 12 or 15 things that we're doing to improve the entire process. That's a pretty good look. And so at the end of the day, customers come into suppliers, they meet with installers, and if you get to this point where the installers are like, dude, Enphase, you have to go with Enphase. It's so easy to manage. It does X, Y, Z. That's great for the future of long-term sales. All right, so let's take a look at where we stand today. On Enphase, you got a price of $145.90. Now we have some new information about earnings that we'll try to plug into a little bit of a formula here. We go down to Eps Estimates. This, by the way, has not been updated. Some of these databases take a while to catch up. This one's on Seeking Alpha. But long story short, the EPS estimate for non-GAAP was $2.06. So if you want to play on the non-GAAP level, you're at a non-GAAP forward PE of about 70 or something like that. I tend to play on the GAAP level because, most of Wall Street does. So it's just easier to do that. And I'm going to let you know that after reading a lot of things and going through different projections, my number comes in at about $1.70 on the GAAP side, and it does assume improvements over Q2, Q3, Q4, not only with seasonally adjusted sales volume, but also with the fact that I think some of this EPS stuff gets corrected. Some of these stock incentive programs and whatever, they kind of go away after Q1, and set up hopefully for a much better last 3 quarters. All right, so if you hit $1.70 at the end of the fiscal year, that is going to put your forward PE at 145. That will make a forward PE of 85, okay? So under 100, which is even funny to say nowadays, but under 100, but it is definitely escalated from some of these prices. All right, so when we look at Enphase today, and we'll just go with the year-to-date chart here, and you kind of see the 50-day and the 200-day, the 200 being in orange. You know, 200-day, the stock's still moving in the right direction, but I do think you could see testing this low a little bit, or certainly coming close to it. So if I was a new investor and I was interested in buying the dip on Enphase right now, honestly, I would say that you want to be in the 130s. I think that you wait for the right day on the market, you get into the 130s, and you still have to recognize that that's not a bargain basement price. You are still going to have to be in for probably 2 years for the valuation to catch up. In my case, what I'm doing right now is I'm looking for the 130s too. I'll probably do one last buy on Enphase. I have to be careful because it's becoming a big part of my portfolio, and this valuation is running ahead of itself after yesterday's news. But I'm going to look for an opportunity to add maybe one more lot of Enphase. You can see we're losing steam on RSI. Potentially, if we got back to this March 8th level, you could hit 132. And, I think that that's a good buy at those price targets. All right, let's take a look at TipRanks, see what the best performing analysts have to say about this stock. And obviously, you're going to get a lot of updates because you just had a big earnings call. And you still have buys in the 200s, but you can see how we flipped a handful of people, 1, 2, 3, 4, 5, over to the hold side. And that's exactly where I am, right? I'm holding. I'm not selling Enphase. I'm not freaking out. I just want to see, and let me clear some of these guys out and just get into 4 and 5 star analysts here. Okay, so today you got hold at 160, buy at 220, even after the earnings report. Couple holds and a couple $200 targets here. So there's still people who are bullish, as am I. But in this very short term, coming right off of this earnings call, okay, I think Enphase is a hold. I just want to be 100% honest. I'm a huge fan of the company. I like where it's going. I encourage you to read the earnings report transcript. In that transcript, the CEO does a great job of talking about the sort of under the radar developments in the supplier network, improving net promoter scores, improving their supply chain by bringing on more partners to try to deal with the semiconductor shortage, and basically confirms that demand couldn't be better. Demand is not the problem here. It's providing for the demand. And so if you are an Enphase stockholder like I am, that's the hardest thing to do. The hardest thing to do is win customers, right? So assuming Enphase can keep those customers sort of quiet while we sort out some of these shortages, then, there's still this to the moon opportunity over the long term for this company because they've attracted business. Now they need to fulfill business so that they can get paid. All right, long story short, guys, I'm holding my Enphase stock. I may try to eke down a little bit on the price per share. I'm still a believer. The fundamentals are there. We're dealing with a short-term problem with this chip shortage, and don't be surprised if Enphase finds a way around it. All right, guys, hope you enjoyed this video. Please give me a like and subscribe if you did. We'll see you on the next one.